Hey guys, this market update. Absolute disaster of a candle right here for this week. So yeah, we've broken this support. Now, we know the reasons for this. Germany, US, Mt. Gox, all selling billions of dollars of BTC. Now, look, this is a short-term, market structure thing, right? You have big sellers in the market who basically don't care what they sell at. So if you're a buyer, yeah, you can buy that Bitcoin, but why should we pay high prices for that? If you're a seller and I know you're going to take down, I'm going to bid lower. So that's what's happening right now. This is obviously not good price action, right? We're clearly, breaking down from this uptrend. However, the longer term uptrend is still intact. So here's some price levels. I thought that for a short term trade, maybe you go in here a little bit. There might be a bounce there. The next level is probably to go in here for the second part of the trade if you're going to go long here. And then this is actually where we might find support if we come down. If we break through this level at 50K, then the kind of whole price structure is broken down. But I don't believe that's going to happen because I do actually believe we're still in a bull market. And I want to go through why, because actually the next 12 months is, for me, very, very positive. And this is like the perfect time because where you make money, where you make returns, is where you are buying at the crossroads of a secular trend, but a cyclical drawdown or a price drawdown, right? I mean, you make returns when you're buying lower prices. And so that's what I was saying in the bear market. Prices are low here, but we have a secular uptrend. And if we look forward 12 months, things are going to be a lot better. We had that 12 months. I still think the next 12 months are the same. Any drawdowns are actually a big opportunity here because what we're doing is buying drawdowns within a big bull market. And I think the macro is about to turn and actually be pretty good for risk assets. So this is actually a big opportunity. I'm not worried at all, right? If we are at the top of the range, like if Bitcoin's at the top of the range up here and we start drawing down, look, you've got a long way to go potentially. But this is a big opportunity in a bull market for me. So yeah, look, we know why the price is going low. Big sellers in the market here. But think about it. They're going to get cleared out by Q3, Q4. We're in Q3 now, but the end of Q3, Q4, you potentially have all sellers cleared out. Central banks easier, right? Election in the US. That is really the trade for this cycle. If we actually look at the halving cycle as well, usually plays out around that. So I just think this is a massive opportunity. Short term, everyone's running around, this is it. It's perfect. It's FUD. People are scared. It's the absolute perfect time to keep going and buying if you can, because when price draws down in a secular uptrend, that's where you make investment returns. If you're a trader, check out Bybit. Link in the description, $30,000 deposit bonus if you do want to trade. And check the details by the link below. Also, the Crypto Investor course has been updated. I've updated it, so if you do have the course, check out the new videos with latest research on what I'm doing. I'll put the price up at the end of this month, but I'll keep it down at the original price for the next, 30 days. This initially was one of the best ever starts to a halving cycle at the price action that we've just had because of the ETFs. Now we've drawn down from that, so you can see where we are. But look, this usually happens, right? Usually for the first couple of months after a halving, the price isn't too bullish. We had this cycle, the 2012 cycle, which was a bit different. You had this, huge run up. But the other two cycles, you can see, they're kind of not doing anything for a while. It's actually the first few months that you get through, and then you start moving up. Now, think what we have here. We have all of this FUD and selling around Mt. Gox and everything. That's working its way through now. Then that's gone, and then you have the halving taking its effect with miners that have capitulated, getting out. Central bank's going to turn very soon. And so it's just playing out just as before. So this is where investors actually make money, where they try and buy FUD. You can see here as well, MVRVZ. The MVRVZ shows areas where price is way overdone, upside and downside. Essentially, I think for most people, we just accumulate BTC because it has the performance over the long term. The only time you pay attention is when BTC is down here, which is the bottom of a bear market. Obviously a big drawdown. Definitely buy there. You buy the whole rest of it as well. When MVRV spikes up to these higher levels, 4.5, 5, 6, if you need cash, that's where you actually let go. Other than that, manage your own portfolio and your lifestyle, etc., where you're just making regular investments in and wait for the outperformance. Simple as that. And this is great news because we can accumulate more BTC up here. If you need cash, that's where it is, I think. Trading cycles. You can also see here, this is Bitcoin hash ribbons. Look, some miners are capitulating as well at these levels. The difficulty adjustment will obviously kick in here, but it is the halving cutting the new BTC rewards some miners are going to have to turn off. So that's what's happening. Always happens after a halving. It's totally normal. And of course, we have just this extra selling and extra FUD, which is, look, if you're an investor and you have at least a 6 to 12 month time horizon, what's the big deal? The reason I say we're in a bull market right now is not because the economy is doing well. In fact, most of the economic data is showing a lot of weakness. Why is that bullish? It's not bullish. It's not bullish for us. It's not bullish for our families, our earnings potential. There is no growth in most Western economies. The population isn't growing. In fact, it's starting to look like it might decline. Why would the economy grow? Why would GDP grow? Why would the price level grow? The only reason it needs to grow is because the price level at which we're trading at for all of our stuff, like houses and real estate, commercial real estate, office buildings, everything, the price level is wrong. It's been pumped up after 2008 by stimulus so that it didn't crash down. And now we're all trading at the wrong price. And we've all got leverage on all of this at the wrong price. So we can't let that collapse. So what we're having to do is pay for it at like 10% a year, right? So instead of the whole thing collapsing and everyone's debt going into negative equity and nobody being able to pay for anything, we had to make a decision as societies where we say, look, we need to pay this off and we need to basically steal everyone's money. We need to socialize the loss, 10% of everyone's money every year to keep this price level completely wrong, right? Otherwise it will crashes. The trade in Bitcoin, we're trading the fact that we still have to pay for that at 10% a year through currency debasement, plus all the other stuff. The trade is that real GDP and the price level should be way lower, and that's what's naturally going to happen. But this massive stimulus coming in, trying to keep it back up. The trade in Bitcoin is that stimulus will debase the currency, either through monetary policy or fiscal stimulus, stealing from savers, pumping money into the economy, manipulating price levels to unnatural levels. That creates asset prices that go up in the fiat currency. Bitcoin's a purest play on that. So what we're trading here is that one question: will the currency still be debased? Will stimulus still be forced into the economy? If the economy is showing its natural state here, which is very slow to negative growth, which it's now showing, the central bank is way too tight, forcing that down. So what's going to happen? The central bank has to ease, right? You have to get more stimulus in. That stimulus debases a currency. We have to be outside that currency. That's the trade. You can see here, this is the latest real GDP estimate just coming down, right, to pretty slow levels, right? So it's just showing where the natural price level should be. Real GDP is 1 to 1.5%. That's not enough. Now, remember, real GDP, 1 to 1.5%. Headline CPI, 3%. Nominal GDP, 4.5%. Fed funds rates at 5.5%. And everything's coming like this. The central bank has to turn, which means this is not bullish. The economy is not bullish. No growth. It's the currency that has to get debased. And so we have to trade that, which is Bitcoin. The opposite of that trade. You can see services PMI coming down here at levels that are potentially not great, right? Recessionary. Look, things might get very volatile. The market is not going to bid that up unless it thinks the central bank comes out and says, look, we're going to cut rates. We're going to stop QT. That's bullish because the currency gets debased, not because the economy is doing well. That is the trade that we're in our generation. Composite PMIs down at low levels. If it carries on, that this is a recession. This is apartments hitting the market going up, apartments filling up at the slowest pace. This is important because a massive contributor to the CPI is owner equivalent rents. This is a very lagging indicator. This is going to seep into CPI and inflation figures over the next 6, 12, 18 months. And so, inflation is going to be coming down a lot. And we know that they actually need inflation and they need GDP to be higher, even though it naturally isn't. And so currency debasement or fiscal stimulus pushes assets higher. Remember, assets going higher is good news if you own them and not good news if you don't. The way people become poor is not by having less income if they're working. It's by the things that they want to buy just getting more and more expensive faster than their income. That's how poverty is inflicted upon us. And assets going up, it's good news if you own them. It's terrible news if you don't. So this is what's happening. And they need to inflate prices with stimulus because the economy is slowing. So our trade is not trading the economic weakness. It's trading the currency debasement that will come from that economic weakness. You can see here, the debt levels are insane. Debt levels are actually absolutely insane. And this is at a time when GDP is starting to come off. So if GDP comes off, they're going to have to issue even more debt because their costs are fixed. GDP isn't producing much. Tax receipts aren't paying for it. Well, if you have this amount of debt, the way they usually pay for it is financial repression. There's no real other way around it. So this is the trade. This is the real trade. What's happening now with BTC, it's selling off a little bit. It's really irrelevant, right? This is short-term stuff. We're trading, a much bigger trade here, which is the debasement of fiat currency. And so you have to be out of that. So look, we're trading based on huge sellers in the market. They can sell, but the next 6 to 12 months, GDP is going to be pretty low. They're going to flip. And eventually they need cover to actually print money. They can't just say we're going to print money because we feel like it. There has to be some sort of recession. There has to be an unemployment spike. And then the central bank can come out and say, hey, look, you want to be unemployed or you want us to print some money? And it's always the printing money. And that's why we're in BTC. Crypto course has been updated. If you're a member, just check out the free videos and Bybit deposit bonus down in the description, $30,000. I'm James with Manzi G. Cheers for watching. And I'll see you in the next one.